Are you here because you are wondering what is eToro and how does it work? Well, in this video I'm going to explain to you exactly what eToro is, how it works, how you could lose a lot of money easily, or with some sensible research make a lot of money. Hello and welcome. I'm Wayne from WES Investments, bringing you stock market news, portfolio updates and training to help you make money in the market, all on this channel. So if you're new here, consider subscribing. So to start off with, I just want to do a quick poll. Comment below with your status on eToro. If you are new, just add newbie. If you have some experience, put how long, and also include your rank if you're a PI. It would be great to know where people watching these videos are so that I can make sure to tailor them to you. So, what is eToro? Well, on Wikipedia, eToro is described as a social trading and multi-asset brokerage company that focuses on providing financial and copy trading services. It has registered offices in Cyprus, Israel, the United Kingdom, the United States, in Australia. In 2018, the company's value was $800 million. If, like me, when I first found out about eToro, you are probably thinking I have no idea what any of that means. So let's break it down a bit. Multi-asset brokerage company. In basic terms, this means that you can buy or sell different assets, like a stock, for example Amazon, a commodity like gold or oil. Just so that you know, you won't actually have to have the physical commodity. Like, don't worry, you're not going to have to organise delivery for a few barrels of oil. This is the rights to the commodity. You can also trade currencies, that's also called Forex, and also a large number of cryptocurrencies such as Bitcoin. For ease, throughout this video, I'm going to refer to all of these as assets. And while they are all different, and it is important to understand the differences between them, on eToro, the way that they are traded is the same. So from a basic standpoint, there is very little difference. So that is all a multi-asset brokerage company really means in this case. Social trading. Now, we all know what social media is. Well, eToro is the asset trading equivalent of social media. In the same way that on Twitter you can follow celebrities or people that you find interesting, on eToro you can follow investors that you think are knowledgeable and understand how to trade the market. Not only this, but you can see what they are trading and even how successful they've been. Now, let me show you my profile as an example. So, just like other social media, on my wall, or as eToro calls it, feed, you can see all of my posts, all the things that I have been talking about and sharing with people that follow me. We then have the bio, and this is a personal description written by yourself about yourself so that people can understand who you are and how you trade. We also have mini stats information here, but it goes into more depth on the next tab. So then we have the stats page. Firstly, this shows the person's performance each month. So for example, you can see here that when you know very little about what you are doing, it is very easy to lose a lot of money. I have a video all about that, how I managed to lose almost 95% of my money and how I turned it all around to the success story that you can see here. So these stats are calculated by how much you have made month over month and then over the year. So for example, if you started the month with $1,000 and at the end of the month you had $1,200, your stat would be 20% because you have increased your money by 20%. This takes into consideration funds that you have added, so it cannot be increased by just adding your own funds to the account. Next, we have the risk score. This is how risky the portfolio is deemed by eToro. This is based on the volatility of the assets that you have. Volatility is just the amount that an asset changes in price over a timescale. So an asset that jumps 20% in value and also drops 20% in value regularly would be considered very volatile. So for example, I held a very similar portfolio throughout this whole period. However, due to market volatility caused by the global pandemic, eToro calculated my portfolio as being a much higher risk. Now, this does not necessarily mean that a trader has lost money. In fact, You could find a trader that has a very low risk score that loses money every month, and someone with a very high risk score who makes good profits every month. This score is just to say that if things went badly, they are more likely to lose more money if the trader is at high risk. Next, we have the copiers section. This is one of the unique things about eToro. If you are interested in investing, but you're not sure exactly what assets to invest in, or you keep trying, and like me at the start, you just keep losing money, then there is a really great feature that lets you just copy another trader that you like. So for example, here you can see that I have this many people that are copying me. This means every time I buy an asset, they will buy it as well. And when I sell an asset, so do they. The beauty of this means that if you have a full-time job and you don't have time to constantly watch the market, you can find someone that you can trust, and you can instead just let them do all the hard work for you. What I have seen a number of people do is put some of their funds into a copy trading an investor that they like. Then they have some more cash on the side to play with themselves and learn how to trade. This way they make their own investments and they learn from their own investment, while also making money and learning from another popular investor. Next, we have trading information. This shows you the type of trader or investor that the person is, how often they trade, how often they make money, and what they trade the most. You do need to be very careful with any stats that you see, and you need to consider all the different factors. For example, you can see here that this stat is saying that less than 60% of my trades are profitable, which on the surface could seem like quite a red flag. But when you scroll down a little further, it shows you that, for example, I've made 15 trades with Tesla. 80% of those were profitable. Out of that 80%, the average profit was 73.44%. The 20% that I closed at a loss were an average of 19.56% down. And a little bit lower, you have quite a bad stat here. With Disney, you can see only 44.44% of these trades were profitable. So I must have lost a lot of money with Disney, right? Well, look at this here. That 44.44% is 4 trades. That made an average of 21.46% profit, as opposed to the 5 trades that lost me on average 2.6%. So if you imagine that I had $100 on each of these trades, my 5 losing trades would have lost me a total of $13, but my 4 winning trades would have made me a total of $85.84, meaning a total profit of $72.84. Now, I don't remember if all of these trades were concurrent, but in theory, that could be a single investment of $100 traded 9 times, and for that return of $72.84. Not a bad return rate with a failure rate of over 55%. Now, the reason that I'm saying this is because you need to look at all of the numbers. Don't just look at the numbers like this and make a snap decision. And if you scroll down a little further, there's also some additional stats. I don't find these useful, but you might. You can then click on the portfolio tab to see what the investor is currently investing in. This can be a great way to see what these investors view as important assets. So this is my current portfolio. And as you can see here, you have the asset, the type of position that we have. This is either buying or selling. So buying means that we benefit if the price goes up, and selling means that we benefit if the price goes down. We then have the amount of our portfolio invested. So for example here, 19.3% of our portfolio is invested in Tesla. This means if you were to copy me with $1,000, $193 would be invested in Tesla. We then have the profit loss percentage. This simply shows how much we are winning or losing on this particular trade. As you can see, this position is currently up 50.92%, and that is why the next part is very important, the value. This is the overall value of the asset in comparison to my overall portfolio. So with Tesla, for example, where it's made so much profit, it now means that all of the funds that I have in eToro, Tesla accounts for 24.16% of that. We also have the stock price, and you can see here what is called the spread. Now, if you've ever been to another country and had to exchange your currency, this may look familiar. When you buy the asset, you do so at this price, and when you sell the asset, you do so at this price. And you can see that the buy price is a little bit higher than the price when you want to sell it back. So this small loss that you make when you buy and instantly sell is called the spread. Finally, on the profile page, we have the chart. And the purpose of the chart is to simulate a copy trade. That is, if you copied me with $10,000 on the 1st of August last year, you would currently have $31,035.64. I find this can be a very good quick view to see how a trader is performing, and you can often find the details here can be very different to the bar chart that I showed you earlier, because there are various things that impact an investment. So it's always good to check the different angles. So for example, when I said earlier about the value of the portfolio over the invested amount on the portfolio, these two can cause different results on the two graphs. A couple of other bits to see for eToro is the newsfeed, which gives you a good stream of what people are posting and talking about. You can see here that people are tagging different assets, and if you click on the asset, it will then take you to that asset and the feed there and all the conversations that are happening about that particular asset. So if, for example, a lot of people started talking about Tesla, then you could go to the Tesla feed and you could start seeing all of the news and everything that people are saying about Tesla. You also have the Copy People page, which is great because it shows you a selection of traders who have met the specific criteria that eToro sets to make them become a popular investor. And this can be a great way to check out for trading tips and see what they are investing in, and look at what they are posting about and get some great tips. Now, you may be asking, why would investors want you to copy them? And why would they want to share tips with you for free? This must be some sort of scam, right? Well, that is because eToro pays them. Again, now you're probably thinking that must be some sort of scam. Why would they do that? So let me explain this a bit better. As a popular investor, you get paid by eToro to manage a portfolio. And that portfolio is the funds that people use to copy you. So the more people that trust an investor and put money into copying them, the more eToro will pay the investor. And why would they do that? Well, it's a win-win-win situation. The investor benefits because they make money, eToro benefits because more people are trading on their platform, and the popular investor benefits because of the fact that they're making money just from being on the platform. Now, if the popular investor or the PI is good, they will share information, stock analysis, and post regularly to update other investors. Now, they'll do that because they want people to trust them and to invest in their copy trade. The PI will make good returns themselves. Other investors will see this and they will start to open copy positions in the PI. So the PI is sharing information with investors and adding value to eToro, encouraging investors to stay on eToro. It also means rather than risking and losing their own money like most new investors do, they are investing it better and therefore making more money. This means that they will stay on eToro longer and make more trades, making more money for eToro. This means eToro is happy. So just to go back over that very slightly, that sometimes there is a little bit of a misconception that eToro wants you to lose money because that's how they make money, okay? But it isn't. eToro makes money every time you trade. Therefore, the more money you have, the more money you trade, the more money eToro makes. So they want you to make lots of profitable trades and have loads of money, because the more money you have, the more trades you make. So remember that eToro benefits from you making money, not from you losing money. And that's why this circle works, is because you, the investor, are now happy because you are making money, and you also feel that your money is in safe hands with the PI because they're posting regularly and they are explaining everything that they're doing. So you trust them to look after your money. And the PI is happy because eToro is paying them for their services. Sorry, I think I went off on a bit of a tangent there, but that is what is meant by social trading. Now, the other thing is that eToro has registered offices around the world. It is registered with many different financial bodies and is valued at $800 million. Now, to me, that says this would be a safe company to put your money with. Obviously, I am biased because I'm on eToro and I'm a popular investor there, so I want you to come to eToro and invest your money in my copy trade. But the numbers do speak for themselves. Remember, I'm not a financial advisor. You do need to do your own research here, okay? But along those same lines, there are a huge number of multi-asset brokerage companies out there, and you should really find the one with the platform that works best for you. Now, you will find that there are two different types of platforms out there. I like to call them either old school or modern. Now, the old school platforms are designed for investors with sufficient funds who make very large purchases. These normally charge a flat fee when you purchase a stock, so it makes more sense to make a fewer, larger purchases. These kind of platforms are ideal if you're the kind of investor with a lot of experience who is going to put, say, 10,000 or more in each asset. This is the traditional brokerage companies who generally are not interested in smaller investors. The modern companies are ones more like eToro. They don't charge a fixed fee. Instead, they have what is called a spread, which I described earlier. And as an idea, I have one asset that I purchased for $500 worth, and it was instantly down 75 cents. Okay, so $500 worth of the stock, and it cost me 75 cents for that transaction. Just to give you a rough idea. Now, each asset is different, so you'd need to be checking on the specific assets, and it also depends on if you use leverage, which is a whole nother avenue to go down, and we'll describe that in another video at another time. But that's just to give you a very rough idea. So I hope that explains the eToro platform, what it is, how it works, and why you could make a lot of money trading responsibly or lose a lot of money by not, like I did in my first year. Now, there'll be a link down in the description to my profile on eToro. At the time of filming this, it's not an affiliate link. However, if this does become one, I will include a note in that to explain. And if there is that note and you haven't yet joined eToro, please use my affiliate link because it will help to support this channel. Thanks for watching, and make sure to watch this little note at the end.